Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He also writes for the Financial Intelligence Report. He's speaking to us from the Bahamas. Welcome back to the show, David.
Well, I got plenty of time to talk because we're on the full 24/7 curfew lockdown here. So the next few weeks I'll be spending a lot of time in my house and office.
Yeah, a chance to really perhaps think about things you didn't want to really have to think about.
Well, like we had a curfew before that, and at the very least I was like, I wanted to lose some weight, so I just walked down to the beach every day. But it's really more. I live in Eleuthera, and it's more directed at Nassau because I think people weren't really taking the curfew seriously, and they didn't want people venturing out all the time, because you could potentially spread the virus. And so then finally, they just decided to do a full lockdown. But even though we're much smaller on these smaller out islands, and there's not as many people here, they kind of had to include everyone in it. So one of the bans was public beaches, and so I can't even really go down to the beach. I never thought when I moved to the Bahamas I wouldn't be able to go to a beach. But that's kind of what's happened. But I have like a good chunk of property and a big screen TV and a hot tub. So being in, confined to this at my place isn't the end of the world,
The markets had a 20% bounce back from their lows on Monday. Is this the end of the downturn, or is this just a false encouragement to throw money in?
I would think that if this is just a V-bottom, that's actually really negative. Because the only other V-bottom I can remember on really intense selling like this was in 2001. After 9/11, there was 4 or 5 days where the market really got hit hard and the volatility spiked. And then there was kind of a V-bottom with no retest. So typically what happens in these crashes, you get what's called a retest. If you look at 1987, the market retested those crash lows in early December of 87 after crashing in October of 87. And then, it successfully retested it and then went higher. And then in 2002, it retested a few times actually. The first low was in July, then in October, then in March of 2003, and then, it headed higher. And then in 2008, it retested in November after falling in October. And then again in March 2009. And what happened in 2001 is that it just kind of spiked down, and then it rallied for 6 months, and then there was another low in 2002, 2003. So I would think if we do kind of see just this V bottom, that's negative, and what would happen is you'd probably rally into the summer and then roll over again in the fall. So, and by the way, retest doesn't also guarantee it's the bottom. Like in 2008, there was a retest of the January low in March of 2008, and then the market rallied for a few months and then rolled over again that fall. So that's also not a guarantee here. I think the issue with this longer term is, in terms of the bailouts, what they're doing in both, Canada and the States, just giving people money, bailing out corporations that are having difficulties right now. And a lot of it, by the way, is their own doing, in terms of spending all their money in cash flow and buybacks rather than, saving it for a rainy day or reinvesting in their businesses. Is really detrimental longer term. I think you were basically bankrupting the country to bail out things on this downturn. And if you're going to do a bailout, like something that might make much more sense is to let Boeing and Delta and UAL or whatever, all these airlines go bankrupt. Just give people maybe say 50% of what their pay was for 6 months. And then let those companies restructure or be taken over by companies that survive the downturn. So that to me would make a lot more sense, but they're basically, in the United States you have a lot of lobbyists, and they're basically bailing out these guys. And Boeing is probably the worst of them all because, they had the issue with the MAX 8 jet, and they were spending so much money. I think they spent $65 billion on buybacks in the last 10 years. And, now they're essentially being bailed out. And the airlines, by the way, they spent a total of $45 billion in buybacks, and the bailout for them is $50 billion. So you could argue if they did not buy back stock, they might not need this money. So I think the days are over for the stock buybacks. I think before 1982 they were illegal, and I think they will become illegal again.
What about banks that get into trouble? Do they deserve to be bailed out?
The thing is about the banks, they were probably a lot more prudent this time than on Canada. I don't know, because Canada's in real trouble because you had this real estate bubble in Canada, and I've been saying for 5, 6, 7 years this was going to burst, and went further than I ever imagined. Like with the dump in Toronto being $1 million. And if you go look at the REITs that track Canadian real estate, and that's not real estate prices, that's a REIT, but they do track, track kind of prices, because they are based on real estate values. They fell 40-50% just overnight. And by the way, that's why I think we're in real trouble here. And this is not just a V bottom, the virus goes away and everything goes back to normal. This is going to really disrupt, people's ability to pay mortgages, to, pay bills and the whatnot. So do the banks deserve to be bailed out? I don't know. It doesn't look like actually they're that stressed right now. I think there'll be some restructuring of individuals' mortgages and some mortgage relief to kind of keep the banks afloat themselves. And like I said, surprisingly, it doesn't look like the banks are about to roll over. But we have to see how this progresses economically, because I think the real problem again is, okay, everyone's just thinking about the short term. Let's bail everybody out and get through this, and then there will be some kind of recovery. But the issue will be, after that recovery, these debts are going to be, like the U.S. right now, debt to GDP is 106%. It's probably going to be 130 by the time this year ends. And then it could be 140 or 150 next year. And the issue with that is, those are the levels that Greece hit when they went into their crisis. So, and unless you're banking on every country in the world becoming Japan, meaning you just have these ultra low rates for decades, even while the debt is high, I think you're mistaken, because Japan is kind of a one-off, and virtually any kind of country that does that is going to have some kind of sovereign crisis. So do the banks deserve to be bailed out? I think that would probably have to come only if there was some kind of real, I would say, latitude given to borrowers on their mortgages, because there's no way you're going to have the banks foreclosing on homes and doing the whatnot and bail them out at the same time. So this time, just so the big banks in the U.S., now there's small banks in the U.S., there's some real problems, especially the ones that are associated in the Midwest and loaned a lot of money to energy and fracking companies. And then, of course, they would loan money to people who work for those companies. I think they're going to have a lot of those small the regional banks may go under, and they're not going to get bailouts. The regional banks almost never get bailouts. And then the large banks actually look okay right now, as in the U.S. I think the Canadian banks, when people never really look at them as being problematic, could be problematic just because the extent to what that housing bubble went to in Canada, right? And I think the real story of this is, you can't be chasing bubbles. The best thing to do for an average individual, someone who can't trade in and out, is once stuff gets really overvalued, and I thought in about 2014, 2015, both real estate in Canada and the stock market in the U.S. was very overvalued, you just kind of step aside and you don't participate in it. Because if real estate values, say, drop 30 to 40% in Canada, and if the stock market fell 30, 40%, and many sectors like airlines and banks and others were even harder hit, you give away all those last 4 or 5 years of gains very quickly, and that's what it does in a bubble. And I think that's the moral of this, is everyone's obviously going to blame the coronavirus for this, but the issue was you had such a huge bubble going on in everything, and asset prices, it was so vulnerable to any kind of shock like this. And that was kind of the issue. And even Nassim Taleb, the guy who wrote The Black Swan, he even said that this is not even a black swan. These pandemics happen every 100 years. So you got to know something like this could happen, and because of the indebtedness of our society and how high the asset prices were, it just made everything very vulnerable to this kind of downturn. So, and like I said, being a chartist, I do, like I said, when you look at the chart of the Canadian REITs or Australia, which also had a real estate bubble, those REITs, that kind of technical damage is not going to be a V bottom. That's a sign of a real break. and a sign that something is wrong. And remember, one of the issues in Canada, one of the things that drove Canadian, real estate bubble higher was a lot of, foreign money coming in, especially Chinese money coming in. Well, if you look at the political backdrop now, even the most liberal people are going to be against mass immigration because, Canadians are going to be out of work. And then that stops a lot of those flows of funds coming in. So I think, that's one of the main drivers. And the fact that that's gone is kind of going to be really bad for the real estate market. Now, I don't even think that's a bad thing because a lot of that Chinese money was illegal money laundering. So that it was going to help, once we do recover a few years out, it will actually help maybe the average Canadian because there's not this illegal money that the government is just turning a blind eye to because the government liked higher real estate prices because it gave them a bigger tax base in terms of property taxes. It'll make maybe things longer term more affordable for the average person.
We'll have more with David Skarica right after the break.
Cyprus Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cyprus Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cyprusdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with David Skarica. David, what do you think is going to happen with gold and silver?
Well, there's an interesting dichotomy going on right now where, we saw them just like 2008 or even at times in 2001, 2002, during those bear markets. When the liquidation phase kind of happens, gold and silver and the gold stocks and silver stocks, they get taken down with the rest of the market. We've kind of seen this bounce back. So there's two interesting factors here in both gold and silver. Number one is, in terms of the demand, there's a huge amount of demand coming because people are scared. They don't know which companies are going to fail. They don't know now the government, even though we're kind of short-term in this deflationary bust, the government's just printing so much money now, is spending so much money to print people, to bail people out. I think people are getting into gold and silver, and the physical market is really tight, and people can't even find gold bars or silver bars. And the whole point of having the futures market was that you're supposed to be able to, convert your future contract into physical. And it seems to me that a lot of these exchanges have almost run out of the physical, right? So, by the way, that's why you really got to a fund like the Central Fund of Canada. I think Sprott took it over now, CEF, because they actually own the gold and silver physically, right? And they have it in a vault somewhere. So, okay, you can't get delivery, but it's a way of owning it. They have it there in a vault, whereas, the GLD just kind of owns certs. So that's the first thing. And then the second thing is, because of the coronavirus, the gold and silver stocks, a lot of them are offline now. They had to shut down production because, when you're mining, especially if you're an underground mine, people are close to each other, and it can be one of the prime areas where you get, carry the infection, or, miners or workers can get affected. So for the next few months, they're offline. So you've got this interesting dichotomy going on where there's demand on the physical markets. Maybe in the paper market, people are being liquidated because they've lost so much money in other assets. They have to sell gold and silver just to keep their head above water. And then you don't have this supply coming on from the miners. So I think in the long run, what it really means is there's going to be a squeeze in supply and more demand. And I think once, I talked about the market earlier, I think if we get this retest or one leg lower in April, which I think is going to happen, and then the market rallies into the summer, which I think is going to happen, the gas and gold and silver could really take off because the selling pressure will be gone from margin calls and other assets, and production should come back online, and you'll have kind of maybe this inflationary effect. See, what causes inflation is not just money printing; it's money printing and disruption of supply chains, and that's Venezuela is the perfect example of that. because, they are a shortage of everything in Venezuela because they ran out of oil money and they printed money like crazy. So this is going to cause a disruption of supply chains. The lack of gold being produced is one of them. And I think that's why you could really see them move significantly higher. So now you have to be real selective with these gold stocks. Like, I'm not saying any of them are going to go under, but some of them may have problems with a couple months offline, right? So you got to make sure that you got ones that are ready to go back online or can survive those few months and go back online. And I think at some point what's going to happen in that industry is even, especially with everything so depressed everywhere else, if gold, say, is like 2,000 by the summer or fall, I think the governments in these countries will just say, just go back into production, because you're going to be creating revenue, jobs, and the whatnot. And I think the gold miners are going to want to do that as well, So
We'll have more with David Skarica right after the break.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with David Skarica. David, did Saudi Arabia and Russia pick the exact wrong time to decide to have a production and price war over crude?
I don't think it's a war. So that's where I differ. I think actually they called it a war, but it was basically, maybe it wasn't an agreement, but they didn't care because they want to put the frackers out of business. I think they're both thinking longer term. Now, maybe they could have made a strategic error. Maybe they can't survive with these low prices. I think Russia's better equipped than Saudi Arabia because they're not so dependent and their per capita costs of the government are lower. But I think they're just they're betting on. And I'm telling you, a lot of these frackers, they need cheap money. They're all cash flow negative. No way they can make money at $23 oil. And I really think, in the U.S. is up to 10 million barrels per day in oil. And if they crush them, that production can be cut by 20%, 20 or 50%. Venezuela is a basket case and will take for years to come back, even if the regime is replaced. And then Canada is like, they got the current government there is another basket case when it comes to oil and gas production. And maybe this will be a wake-up call that you need other industries because the whole Canadian economy was dependent on the real estate bubble, and now that's gone. So I think they're really planning longer term that, when things do return or if monetary policies cause inflation because, again, supply chain disruptions, I think what Saudi Arabia and Russia are banking on is that U.S. fracking boom will end, and because it was based on cheap money and will not come back. And then, Canada's kind of stagnant in oil production. And then, Venezuela is a disaster. So they could actually go back, and Iran's got sanctions. So those two countries could go back to maybe being the primary suppliers of oil and gas. And their companies, they're kind of government backed. They're kind of JVs with the government, Rosneft and some of the others in Russia and Aramco in Saudi Arabia. So I think they're actually, remember the Saudis worked with the Americans back in the 80s to crush oil prices to bankrupt the Soviet Union. And I think those two are doing that right now, Saudi and Russia, to crush the frackers in the United States. So I don't think it was a war. I think it's a bit strategic to get rid of those frackers. And see, like the Russians, they're angry at the Americans with all the sanctions. I think what was happening right before that is Russia was trying to build a pipeline to Germany, and America was getting in the way. And then also, in terms of Saudi Arabia, I just don't fully trust that regime, and they act like they're allies. But on the other hand, they'd probably want to, get rid of the frackers as well. So, but I do think in the short to intermediate term, we're just going to see lower oil prices anyhow, because international demand is just not going to come back. This virus is going to leave real psychological scars in people. People aren't going to, some people won't have the money to drive or travel as much, and some people just won't want to travel because, some people got stuck in countries. Some of these countries like Italy are having a horrible time with it, and people might be scared to go there. And, and all of that sort of thing. So, I do think the only way that oil could ever head up really high again, I think it would be a supply issue where maybe on this downturn, all these U.S. frackers go out of business, and then Saudi Arabia and Russia can control the supply so much that they could cut, supply often at times and cause price spikes. So that's really the only foreseeable thing I could see going forward in the future. And so that would be it. So, we'll have to see. But, I don't think it was a price war. I think it was I'm not going to say they were working together, but I think they also kind of knew, this could be the final dag in the heart for the fracker, especially in the market. Remember, the market was already tanking at that time, so they would have known credit is tightening. Those frackers are going to have a tough time getting access. And remember, even if the frackers don't go down, what they're going to do in the short term is really decrease production. Like I bought a little beaten up oil sands company recently, and part of the reason I bought it was because they're decreasing production and exploration costs to kind of stay alive. So I think a lot of the frackers that don't go under are going to do that. And of course that means less supply on the market. And that means, these larger companies in Russia and Saudi Arabia have more, ability to do that. But by the way, so the positive side is now is your chance, in the next probably 6 to 12 months to really start getting some oil and gas companies cheap. The big drillers in the U.S., Schlumberger, Halliburton, they're not going to go under. Like I said, there's some little, the thing I like about the oil sands in Canada is once you get a deposit there, it's gigantic. It's good for years, if not decades. And that's the issue with the frackers. These are small holes, and then they have to keep borrowing money to keep drilling new holes. The hole's only good for like a year or 6 months, and they have to keep drilling. And that's the issue too when the money gets cut off. So I think right now you have to look at it as a positive. Forget the global economy, is that you're going to get really beaten up cheap oil companies, especially if oil were to say have one more plunge into the teens, and you just got to pick and choose. And I'm doing a couple special reports on that, like oil companies that I like, and going forward. So I think what you really want with the oil companies is either these big, almost state-sponsored ones, like in Russia and Saudi Arabia, some of the drillers, because they can cut off exploration real easy and just kind of sit there, not burn through cash, while and waiting for a turnaround. And then, some of maybe these beaten up oil sands. Like I think actually the positive thing for Canada in oil production is because Canada was so dependent on the real estate bubble and that's gone. I think even it's going to make Canada have to open up other areas of the economy at some point again, which means, maybe build a pipeline, maybe, reduce some of the restrictions on the investments in the oil sands once oil starts to recover. So I think some of the Canadian companies, are going to be good as well, because I think that there'll be a changing political landscape in Canada towards that. And you know what? When people are suffering and the economy's bad, let me tell you something. That global warming crap is going to go out the window. No one is going to care about that. And they're just going to want jobs.
David, thank you so much for being on the show.
Thanks for having me.
My guest has been David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He also writes for the Financial Intelligence Report. He was speaking to us from the Bahamas. If you have any questions for David or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.